Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, May 23rd, and we'll see how things look for Tuesday, May 27th. The big story on Friday was the market's reaction to tariff news. Early in the day, the futures took a sharp hit following an announcement from President Trump about potential tariffs. A 25% levy on Apple iPhones that are manufactured outside of the U.S., and a 50% tariff on the EU starting June 1st as trade talks have faltered. This news triggered a flight to safety, with investors moving into bonds, pushing bond prices up and yields down. But by the time we closed on Friday, yields were back above 4.5% for the 10-year yield, closing at 4.51%. Notably, the 30-year bond briefly dipped below 5%, but ended the day above that threshold. Despite the rocky start, the market showed resilience. The S&P 500 found support at its 100-day simple moving average right after the open and clawed its way back to close above 5,800, being down 0.67% for the day, better than many had feared. Trading volume was below average, suggesting a lack of panic selling. However, the market is working off an overbought condition, and we're seeing early signs of weakness. The White House stepped in later to clarify that the tariffs are a negotiating tactic and not yet implemented, aiming to calm investor nerves. Treasury Secretary Bessent also weighed in, framing rising yields as a sign of stronger growth expectations rather than just negative sentiment, though his role naturally leans towards optimism. The sectors told a clear story. Megacaps and growth, including tech stocks such as Apple, Nvidia, and Microsoft, bore the brunt of the sell-off, while defensive sectors, utilities, staples, energy, and real estate held up better, signaling a cautious investor mindset. Looking at the technical and economic insights, short-term indicators are sending mixed signals. The stochastics are declining with a negative slope, even though it's still extreme positive. The Stoch RSI, however, has already turned extreme negative, pointing to short-term bearishness. The VIX climbed above 22, reflecting heightened uncertainty. Intermediate indicators, such as momentum oscillators and the TTM squeeze, are showing early signs of weakness, though the NASDAQ 100's bullish percent index remains steady and extremely positive. Longer term, the picture is still constructive. The S&P is holding above its 50-day and 200-day moving averages, though the S&P is still in a downtrend. The ADX, a trend strength indicator, remains below 20, indicating no clear trend at this stage. On the economic front, new home sales data provided a bright spot, rising 10.9% month over month to an annualized rate of 743,000, a positive signal for the real estate sector. Sentiment, however, is mixed. The AAII survey shows individual investors turning slightly positive, contrasting with the rising equity put-call ratios, which suggest hedging and caution. The dollar weakened despite the protectionist tariff rhetoric. Looking ahead to Tuesday, May 27th, the markets will return after the Memorial Day holiday, which may introduce some uncertainty. Geopolitical developments and unexpected events over the long weekend could influence sentiment. The economic calendar is pretty heavy in the upcoming week. On Tuesday, we'll get durable goods orders and the FHFA Housing Price Index, as well as the S&P Case-Shiller Home Price Index. Finally, data concerning consumer confidence will be released on Tuesday. Later in the week, the Fed meeting minutes will be released on Wednesday at 2 p.m. Eastern Time, which will be closely watched. Friday brings the core PC inflation and consumer sentiment, both potential market movers. Seasonality offers some optimism, as historical trends suggest May 27th is typically positive for the Dow, S&P, and NASDAQ. However, post-election years often see negative days later in the week, so investors should stay vigilant. Key observations to keep in mind for Tuesday. The market is still digesting tariff-related uncertainties with short-term negativity but longer-term support still holding firm. Defensive sectors are currently outperforming while growth remains under pressure. Investors should keep an eye on support levels, particularly the 200-day moving average for the S&P, and monitor upcoming economic data for signs of a trend shift. Fed Chair Powell will give a speech on Sunday, which could also set the tone for the futures. In conclusion, the markets acted with resilience in spite of tariff-induced turbulence, closing above key support levels despite being down on the day. While short-term indicators point to caution, the broader trend remains positive, with the market holding above critical moving averages. As we head into Tuesday, May 27th, investors should brace for potential volatility driven by economic data, Fed commentary, and lingering geopolitical risks. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.